If you're a homeowner, you know the weight of a mortgage can be heavy. It's likely the biggest debt you'll ever have, and it can take decades to pay off. But what if I told you that there's a way to pay off your mortgage early and achieve financial freedom faster than you ever thought possible? In this video, I'm going to show you 7 practical and effective strategies to pay off your mortgage early and gain financial independence. These strategies are based on real-life success stories and backed by research and data. Did you know that paying off your mortgage early can save you tens of thousands of dollars in interest payments? Or that increasing your mortgage payments by just a small amount each month can make a significant difference in the long run? We'll talk about these and other strategies, giving you the information and tools you need to make smart financial decisions. And the best part, you don't need any gimmicks or quick fixes, just a strategic approach and smart financial decisions. So if you're ready to take control of your finances, achieve financial independence, and pay off your mortgage early, then this video is for you. Don't let the weight of your mortgage hold you down any longer. Like this video, comment, and subscribe to our channel for more informative videos like this. Let's dive into the world of mortgage payoff strategies and financial freedom. Number 7. Start with a larger down payment. This first option applies to those now planning to get a mortgage. It's a good idea to save up as much money as you can for the down payment. The down payment is the amount of money you pay up front when you buy the house, and it's usually a percentage of the total price of the house. By saving up for a larger down payment, you can make your mortgage payments easier and faster to pay off in the long run. This is because a larger down payment means you'll have to borrow less money from the bank, which means you'll have smaller monthly mortgage payments and pay less interest over the life of the loan. Of course, it may take some time to save up for a larger down payment, but it's definitely worth it. You can start by creating a budget and cutting back on unnecessary expenses so you can save more each month. And don't forget to shop around for the best mortgage rates and terms. Make sure you compare different lenders and their offerings to find the most favorable terms for your situation. Number 6. Purchase a house below your budget. When it comes to paying off your mortgage, it's important to be careful not to bite off more than you can chew. Getting a huge mortgage might seem like a good idea at first, but it can actually end up costing you a lot more in the long run. If you buy a house that's at the very top of your budget, you'll have to borrow more money from the bank, which means you'll have higher mortgage payments and more interest charges to pay. Plus, you'll have to pay more in closing costs, property taxes, utilities, and maintenance, which can really add up over time. If you're not careful, you could end up being house poor, which means you'll have to spend most of your income on your mortgage and other housing costs, and you won't have much left over for other things. And the bigger your mortgage is, the longer it will take you to pay it off. If you stretch out your mortgage payments over a longer period of time to make them more affordable, you'll end up paying a lot more in interest charges over the life of the loan. And any extra payments you make to pay down your mortgage principal will have less of an impact. So it's important to be realistic about how much house you can afford and not to stretch yourself too thin. Remember, less house can actually mean more financial independence in the long run. Number 5. Refinance your mortgage for better terms. If you have a mortgage, you're probably paying interest on the loan. If you got your mortgage a while ago, you might be paying a higher interest rate than what's currently available. That's where refinancing comes in. Refinancing means taking out a new loan to pay off your old loan, ideally a lower interest rate. By doing this, you could save money on interest and potentially pay off your mortgage faster. Let's say you have a mortgage for 30 years, that's a long time, and the interest rate is really high at 6%. If you refinance your mortgage, it means you get a new loan to pay off the old one. If you get a new loan with a lower interest rate, like 4%, you'll pay less money in interest charges over time. By refinancing to a lower interest rate, you can actually shorten the amount of time it takes to pay off your mortgage. For example, you could get a 15-year mortgage instead of a 30-year mortgage. Even though your monthly payments might be higher, you'll save money on interest charges in the long run and pay off your mortgage faster. So it's like trading higher payments now for lesser payments in the future while also paying less overall. By refinancing, you can save money in the long run and pay off your mortgage faster. Just make sure to shop around and compare different lenders and their terms to find the best deal for your situation. Number 4. Make extra payments against principal. One way to pay off your mortgage faster and save money on interest is to make extra payments towards the principal balance. You could add an extra amount to your monthly payment or make a principal-only payment once a year. By doing this, you could save tens of thousands of dollars in interest over the life of the loan. For example, let's say you have a 30-year mortgage for $250,000 with a 4% interest rate. If you add an extra $100 to your monthly payment towards the principal, you could pay off your mortgage 4 years earlier and save almost $28,000 in interest payments. This is actually a better tactic than refinancing your mortgage, since it doesn't lock you into a new payment plan. If, for some reason, you can't afford to make extra payments one month, you won't be penalized. However, it's important to check with your lender to make sure any extra payments are applied towards reducing the principal balance and not just prepaying interest. And make sure your lender knows that the extra payment is not meant to cover the next month's mortgage payment. By doing this, you can pay off your mortgage faster and save money on interest without locking yourself into a new payment plan. Number 3, pay bi-weekly. Making bi-weekly mortgage payments instead of monthly ones can be a great way to pay off your mortgage faster and save money on interest. This means paying half of the monthly payment every 2 weeks rather than paying in full at the end of the month. When you make bi-weekly payments, you end up making 26 half payments over the course of a year instead of 12 full payments. This means you're essentially making one extra mortgage payment each year, which can help you save money on interest and pay off your mortgage faster. For example, let's say your mortgage payment is $1,264 per month. If you switch to bi-weekly payments, you'll pay $632 every 2 weeks. Over the course of a year, you'll end up making 13 full payments instead of 12. This extra payment can save you a lot of money on interest and help you pay off your mortgage faster. It's important to note that some mortgage servicers may charge a fee for bi-weekly payments. If this is the case, you can achieve a similar result by mailing in an extra mortgage payment each year or by dividing your monthly payment by 12 and adding that amount to your monthly payment. However, be sure to check with your lender to make sure the extra payment is applied correctly towards your principal balance. Number 2, use unexpected income. One way to pay off your mortgage faster is to use extra money you receive, such as a bonus or inheritance, to make additional payments towards your loan's principal. This can significantly reduce the amount of interest you will pay over time, especially if you do it earlier on in your loan. In fact, during the first 10 years of a typical 30-year mortgage, about half of the total interest you pay will accumulate. This is because your interest rate is calculated based on the high principal amount you owe at the beginning of the loan. By putting any windfalls towards your mortgage principal, you can reduce the amount of interest you will pay overall and pay off your mortgage faster. Number 1, examine your budget. Even if you think you're already budgeting well, there's always room for improvement. One way to get better control over your finances is to use a budgeting template to track your spending. This will help you see exactly where your money is going and identify areas where you can cut back. By making small adjustments over time, you can save money and put it towards your mortgage principal. It may not seem like much at first, but over time, these small changes can really add up and make a big difference in how quickly you pay off your mortgage. So even if you're already following a budget, taking the time to use a budgeting template can help you optimize your spending and put more money towards your home. Congratulations! You've now learned some practical strategies to pay off your mortgage faster and achieve financial freedom. Remember that paying off your mortgage is not a sprint but a marathon. It requires patience, consistency, and discipline. By following some or all of the tips discussed in this video, you can reduce your mortgage term, save thousands of dollars in interest payments, and own your home outright sooner than you thought possible. With this newfound financial freedom, you can focus on other important goals like saving for retirement, investing in your future, or taking that dream vacation you've always wanted. So let's start taking steps towards paying off your mortgage and achieving absolute financial independence. That's the end of today's video. If you found this video helpful, don't forget to give it a thumbs up and subscribe to our channel for more videos like this. Thanks for watching. I'll see you in the next video.